Morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
Good morning. Welcome back to Insurance Matchmaking. Just me again today. I've got a few things I do think are very important, so please stay tuned here and listen to what I have to share. Some of it's going to be repeat stuff, but some of the stuff I think I'm going a little more in depth. But I kind of want to cover first part kind of announcements. I've announced on, I think, the last couple shows, but we will be at the Putnam County Fair. We'll have a booth there, so please come by. We're going to have a drawing, tickets to enter for a drawing, and I think the plan now is we're just going to have several gift cards to like local restaurants. We're going to keep everything local that way, and we'll do that at the after the last day of the fair, and we will notify the winners, and they'll be able to come by the office and pick up their prize. So that's something we're doing, and I'll probably announce that again in a couple other shows. The other one is I need help. It doesn't seem like it, but fall's almost here. In our mind, it does, because we're in the middle of doing our recertifications for our Medicare stuff for this year, and then sometime in August they'll open up the recertification for the ACA plan. So the whole office will be involved in that. That doesn't take a lot of time for that one, so that's not too bad. But the Medicare stuff does take a lot of time. Always, in past years, I've been in a slump, it seems like, in the summer, because I end up focusing on the recertifications and not drumming up new business. This year, I think, has been a little different. I think we've gotten a little more established since I've been here in Cookeville for 3.5 years now. I've opened the new office, have other staff that's producing, so we're staying busy. But as I was saying, we need help. The one of the big things is, and if you remember when Clea was on the radio here recently, she reminded Clea's pregnant. Clea's going to be gone for a while, and right just as we're ramping up to the enrollment season and hopefully be back to work and helping us out once we hit that open enrollment time. But we still need help. And that's kind of how I've been growing my office. As I've mentioned, Bree started out as a receptionist. She wasn't my first receptionist. She was and I'll give a little plug here, she was the last receptionist that I hired through Express Employment. If you're looking for somebody part-time or need office staff, they're a great source for that. But last year I decided I wanted to go ahead and hire somebody directly. And since we were kind of growing more as an agency, we had already set up payroll because I had hired Bree on full-time, so I didn't go through them for this time. And I may do it again, but I am looking to hire. Right now it's a part-time receptionist. Might be a little more closer to full-time during the enrollment season, and then we kind of have to play it by ear to see if we're going to continue, if we're busy enough to afford, not just justify, but afford a full-time receptionist, additional receptionist after the first of the year. So that's what we're kind of looking right now. So if you know someone that wants a clerical job, an inside, not flipping burgers, and they just have to have a clean record. I'm sorry. I don't care if somebody really has turned their life around. If they have a felony conviction, I can't hire them. Not in the insurance business. So, but if you know somebody that's maybe just starting out or just needing something a little part-time just to augment the household income, that's great. We are flexible with, if you've got a kid's doctor appointment or kid's sick, I'm not going to hold that against you. So don't think that I'm not going to hire someone that's got kids. So that's where we're going on the unemployment. Mentioned we're doing the fair, going to be having the drawing, and speaking with Bree and Clea yesterday, they're working up trying to get a little contest to kind of boost our reach with Facebook and that liking our page and sharing the comments and being entered for a drawing. So I don't have details on that. That's what the ladies have got going. So, but we'll get something going there, and so stay tuned on that. The other plug I'm going to say is, please, if you haven't, if you're just listening to this on the radio, that's great. But especially those, if you've gone to the website to listen to past episodes, those are on YouTube. Please subscribe to the channel. When you listen to, and it comes up as a video. I know it's kind of funny. It's all audio, but if you if you listen to the video, just click like, maybe comment on it. That'll help my reach and help me reach more people to help them. Bree has an appointment this week. A lady had posted on the group called Hip Cookville on Facebook, wanting to be able to sit down with somebody. I commented back on her post. There was other people commented, a couple people, that referred Bree. So she contacted Bree and said, "Hey, I want your help." So getting that reach out there, really, it helps us help people. Yes, this is my business. We do this to earn income, earn our living, but there's a lot of times we end up just being that, that advice. I do my Medicare 101 workshops, and every recent attendee has a federal retirement plan. Probably never going to be a client of mine, but I was able to kind of help her figure out what her next steps are going to be. So sometimes we are just being helpful. My wife says, when I was mowing lawns, I used to say, there was a pastor said something about, make your vocation your ministry, and I'm like, I'm just out there mowing their yards. How is that a ministry? My wife was, you help your little old ladies, and they were all like retirees. Sometimes some of them were couples, but most of them were widows living by themselves and needed somebody that would show up when they said they would and mow their lawn. And that's what I did. And she said that was a big ministry to them. And I think, yeah, but I'm charging them for that. She's like, yes, but they still appreciate it. So I was like, so that's how sometimes it kind of works with our insurance business. Sometimes we're just doing a ministry. And in fact, I've even complained. It's like, gosh, I don't mind doing the ministry, but I'd like to do a little less of it. Meaning most of the people I had talked to, I was able to help, but it didn't help me. So, like I said, we are in there to make a living, but we're not going to be greedy. We're not going to be just wanting that money. So anyway, that's where that is. The other thing I wanted to talk about was the short-term medical. I think I've addressed it a couple times here just recently, but the Biden administration's CMS, Centers for Medicare and Medicaid, or Health and Human Services, actually, which is still falls under, or I guess CMS falls under HHS. Anyway, they want more people to sign up for the ACA marketplace plans, also known as Obamacare. And so to try to push more people towards that system, they've clamped down on the short-term medical plans again. And the way the short-term medical plans work are they are medically underwritten. You have to be in good health to get one of those plans. The good news on those plans are there is no enrollment period, so you can get the plan anytime. And what had happened was it used to be people would get those plans to fill the gaps between when they left an employer and picked up another employer, or if they were going to get private insurance if they didn't get an employer with health coverage, because you had to have continuous coverage or you could get turned down for health insurance. That was before the ACA. The ACA now, you don't have to have that continuity, but you do have to have an enrollment period to get a marketplace plan. So if you're leaving your job, that's a special enrollment. You get married, get all those different life changes. Those give you a special enrollment. If you wait too long, then you have to wait to the next open enrollment period. And that is true for any non-underwritten health plan. And when I say non-underwritten, that's your ACA marketplace, your employer group insurance, and then private insurance. And when people talk about private insurance, it's the same plans. There are some variations, like some of the plans are only on the ACA, but all three of the carriers we have, Blue Cross, Ambetter, United Healthcare, they all will sell you a health plan directly that meets the ACA requirements. But because those meet the ACA requirements, they can only enroll you if you have a special approved election period, whether it's a special election because you're moving, losing a job, turning 26, getting kicked off your parents' insurance. You have to have a special enrollment to get those plans. But they can't ask you any health questions, so your health doesn't matter, and you can get that plan as long as you have an election period. Most people have something serious. They're not going to let themselves have that gap, but you can get those. Well, anyway, what I was saying is the short-term plans, we have until August 31st. One of the carriers, I think, says we have to do it by August 30th, because what we would do with those plans are they're typically, we've been selling them as 12-month plans. Traditionally, a short-term plan was usually three months, sometimes 3 to 6 months. Insurance carriers got creative and said, hey, people who don't qualify for a subsidy, or even if they get a subsidy, it's still way too expensive to get that health plan, but they want to have some sort of coverage. they could get a 12-month short-term plan. At the end of that 12 months, you had to reapply and qualify again. So if something changed in your health in that 12 months, then you wouldn't be able to get one of those short-term plans. And then you would have to go get what's called a qualified plan, which typically is the Affordable Care Marketplace plans. And I say affordable choice because I'm thinking about something else I was going to talk about here in a bit. So that happens, and then they came up with options of you could kind of bundle that for a 3-year period. So it would automatically renew in year 2 and year 3, and you didn't have to go through the health underwriting on that. The beauty of that was you weren't stuck to that. You could drop that plan at any time. And just, hey, I don't need this plan anymore, or I got a job, they're giving me insurance, and you could drop that plan. You weren't committed to paying for it for 3 years. So that was great for individuals, and we still have that, but we have to act before, I would say August 30th. So if you have one of those plans with any carrier you have, it's going to be across the board. They're not going to be able to do it. They can sell you a 3-month plan, and the government says you can extend it up to 4 months. But at the end of that 4 months, you cannot renew that plan with that same company. You would have to go to another company and buy a 3-month plan and do that. And when you do that, all your deductibles start over. The other thing is, if you have any health issues, that's going to go away. So the short-term plans will still be there, but they just aren't going to last as long and be covering. And these plans have worked great for my clients that I run into. They're like 62 or 61 and a half, and because they get that 3-year locked in, and at the end of the 3 years, they're going on Medicare, and they're not going to need it anymore. So it has worked great for bridging those gaps, especially for those, 62 and 63 especially. Along with that, we do have what's called fixed indemnity plans, and sometimes referred to as specified benefit plans, where they will pay a certain amount for certain procedures, whether it's a doctor's office visit, whether it's an x-ray, whether it's a shot, whether it's a surgery, whether it's an emergency room visit. It'll pay a fixed amount. Now, that's great that it pays that, but that may not cover it all. So it's not going to pay any more than that, but it does help offset a lot of those costs. Those plans aren't set under that rule. You can have those plans at any time. Again, you can sign up for them at any time, but you don't have any maximum out-of-pocket protection, and they may not pay 100% of what you're having done. So they're a good fix for, hey, I just want something so I can go to the doctor a couple times a year. If I do have to go to the emergency room or urgent care, it's not going to it's not going to drain my bank account. And the reason I said that, one of the plans that does it, it's called Affordable Choice. So that's when I was thinking Affordable Choice when I said Affordable Care Act. But we will, so those are some plans that you might be able to look at. So I'm coming up on the break here, and I've got a couple of other things on the Medicare side that I'm probably going to focus a little bit more on in this second half.
Looking to spruce up your home without breaking the bank? Visit Habitat Restore for incredible deals on furniture, appliances, home decor, and more. Plus, when you shop at Habitat Restore, you're not just getting great deals, you're also supporting your local community. Are you looking to make a meaningful impact? Consider donating to Habitat Restore. Your generosity can make a world of difference. Habitat Restore, open Tuesday through Saturday, 10 a.m. to 6 p.m., and located at 560 South Jefferson Avenue in Cookeville.
Hi, this is David Price, your local Twin Lakes Business Solution Consultant. When was the last time you evaluated your company's communication needs? Twin Lakes Advanced Gig Speed Fiber Internet enables advanced capabilities for all types of businesses, helping you create a better customer experience and more efficient team. And the best part, Twin Lakes is based right here in the Upper Cumberland, so you get fast, friendly, and local support. Contact me today at 800-644-8582 or visit us online at twinlakes.net to learn more.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, and welcome back here. Get going. I mentioned before the break, I was going to talk a little bit about Medicare supplements, and we're just Medicare in general, but Medicare supplements, what I'm going to start with. If you follow my Facebook page, you probably saw the post, but I actually saved a couple $200, and that's $200 per month that they're going to be saving on what they were paying for their Medicare supplements. Medicare supplements don't have an enrollment period. You kind of you can kind of say, when you're first going on Medicare, you have your initial, election period there. So you have there's some rules for when you're brand new to Medicare about enrolling in a Medicare supplement, because the first 6 months they can't ask you any health questions because Medicare supplements are medically underwritten. They're not a guaranteed issue. But the first 6 months that you have, whether you first 6 months of turning 65 or when you get Part B, because for those that continue to work after turning 65, don't activate your Part B if you're getting employer insurance, and then wait to get that when you leave the employer, and you can get a Medicare supplement, and there's no health questions at that time. But what happens, Medicare supplements also go up. Basically, each year as you get older, they're basically going to go up because you're a year older, and they usually will have some type of annual cost of living raise. Now, generally, most plans are going to apply that increase, that cost of living increase, or inflation increase, I should say, to the plan when they increase your premium when you hit the anniversary date of when you enroll in that plan. But that being said, as you get older, those rates can get really high, and depending on what plan you picked and what rate it was when you got it, it's going to cost you. That's where sometimes I talk to people. Sometimes a Plan N can be a better option because it's a much lower premium than a Plan G. One of the carriers I've noticed this year, I usually say Plan N's not going to raise their rates usually as high as the other. There's a carrier out there that is raising their rates 16%. Or I don't know if it's Tennessee. I've got to remember now. I was looking at, because I get the emails for like all the states they do, and they come in by state. But it's one of the states that I'm appointed in. It's a 16% increase, so it's probably pretty much kind of be a national thing for them. They applied that also to Plan N. So Plan N, Plan G, and Plan F for that company, they're all going up 16%. Their high deductible Plan G is not going up, so that's kind of interesting, because the thing is, you have a lot more out of pocket on your own on those, so they figure, I guess they'll give a break. They want people on those plans because they know they don't have to pay the first $2,800. So that being said, the rates go up. As you get older, I've had people come to me, I just can't afford this anymore. I want one of those zero premium Medicare Advantage plans. And a lot of times they're doing that, one, because they're just tired of paying, but the other thing, sometimes they can't get approved for another Medicare supplement because they have some health history. They've had cancer, they've had a heart attack, they're diabetic, and they're taking so much insulin. And usually from a lot of companies, it only really affects if they're insulin dependent diabetic. Some companies, if you are taking any diabetes drugs, they're not going to approve you. And then others have if you have diabetes and heart problems, you're not going to get it. Also, COPD is another one of those big knockouts. So any of those things like that are major health issues, most plans are going to turn you down and say, you better keep what you have. And also some of them will do where they'll do a rate up. They'll approve you, but it's a higher rate because of some health condition. So I've had a couple people that were looking to get a lower rate, and they got qualified but qualified at the higher rate. And that higher rate was more than what they were paying, so it didn't make sense to change. But a lot of times it can make sense to change, especially when I mentioned this couple, because they were a married couple, they were able to get a household discount also. So that couple together with the plans that they wanted made it a great savings. In the interesting thing was, as I was doing the quotes and stuff for them, I insured both of them for less than what the husband had been paying. So for just his. So that gives you kind of an idea of, like I said, that was substantial savings. Doesn't cost anything to check. Doesn't cost anything to apply. Now, some of them will charge like an application fee, but they can only charge you that if they approve you. So you can do an application and see if it makes sense to change plans, lower your rates, because it doesn't. They all have to cover the same thing. They all supplement the part of your Medicare, that 20% that Medicare doesn't cover. Those supplements will pick that up, and there's no networks. So that's the biggie there, is if you want to save a little money. The other thing is, don't wait. If you're in good health today, let's do it today. You do not, because like I said, there's no enrollment period. And the other thing is, I'd much rather do it now than try to. And not that I won't do it, but it's a lot easier to take care of that now instead of trying to find a time that an appointment that will fit when we're in the annual election period and everybody's looking to change their drug plan or their Medicare Advantage plan. That's what that time period's for. It's not a Medicare supplement enrollment period. You can change that plan any month of the year. So if you complaining about, or you hear someone complaining about paying, how much they're paying for their Medicare plan, have them give me a call. Let's see if we can't save them some money. It might not be as drastic savings as it was with this couple, but any savings is good. If I'm saving you $20 or $30 a month, that adds up. And it also puts when they have their increases, again, you're starting at that lower amount. Sometimes it makes sense. Some people who have a Plan F, they might decide, I'm okay with paying the Part B deductible. I want to save that couple $100 a month in premium from that. So that alone. Now, and I bring that up because this couple didn't do that. I saved them $200, and they both have a Plan F. So even though you maybe heard me talk about, hey, you want to have lower rates, let's look at G instead of F. They were satisfied with the savings on the F that was going to save them. Now, one of the issues, and this is pretty much typical with most companies, but unlike on this company, heart disease and like a heart attack or cancer, it's a 2-year look back. So if you went through cancer treatment, finished your cancer treatment over 2 years ago, even though maybe it's just 2.5 years ago, you think, oh, I can't do anything. It hasn't been 5 years, 24 months. The question is, in the past 24 months, have you been treated for cancer? If the answer's no, the answer's no. It's not I was 2-3 years ago. No, it asks you in the past 24 months. So that's a good fit there. So that's something to check on. And again, it doesn't cost anything to check to see if I can save you some money. So let's get together on that. Like I said, summer is usually a slow time for us, so we'd love to get some business going in July, in August, and be ready for our enrollment period. Now, I will say I do still want to, probably review your drug coverage for that time period, because there's been a lot of changes. A lot of plans are going to be raising their premiums or raising their copays, and the drug plan you have may not be the best fit for you. I talked to somebody who had a plan that started out as a discount plan a few years ago. It was like $15 a month. This past year, it's $40 a month. And he's paying $40 a month for a drug plan for a couple of prescriptions that would cost him maybe a couple dollars on another plan. But he's paying $40 a month premium. So those are some things that, just because something's a big household name doesn't mean it's the best plan for you. We can check on that. So let us know how we can help there. The other thing is, I mentioned the Part D. The prescription drug coverage. I've talked about this a little bit before. Got a little bit more details on what they're calling the payment plan. And I'm saying they're calling it there's going to be a payment plan. I can't remember, what exactly they've actually coined a name for the. But what it is, in 2025, the prescription drug coverage, Part D for Medicare, is going to have a $2,000 maximum out of pocket. So what Medicare's allowing the carriers, the insurance companies, to do is be able to set you up on a monthly payment plan. So basically what they'll do is it's $2,000 divided by the number of months that you're going to have it, or whatever, your whatever balance you have towards the $2,000. So if you maybe, you paid that, because it can be $590 deductible. Is the drug deductible of Part D. Anybody has a brand name drug for sure is going to be paying that. Tier 3 and up on most plans. Some plans, I saw one plan, it looked like maybe, I can't remember who it was, and I probably couldn't tell you now if it was. But the deductible is going to be Tier 4 and up. So Tier 3 would still not be subject to the deductible. I've never seen that before. So I think that is something new that will be happening. But that $590 deductible, and then you pay your copays a lot, especially on the brand name drugs. Most of the plans I think are going to go to this. It's going to be like 25% or some percentage is going to be the deductible for Tier 3. I mean the copay for Tier 3. So when you add that up, if you add up your total costs are going to be over $2,000, you can set up that payment plan and just make a payment each month. And that's separate from your premium payment. So whatever your premium payment is, you have to continue to pay that. If you have that coming out of your Social Security check, that doesn't change. But the payment plan, you'll have to set that up like, any other insurance premiums or any other bill, you're going to have to pay that bill, whether you mail in the bill or whether you set it up on an auto draft like from your bank account. But you have to pay, you actually physically pay that. You can't set it up as like an allotment through your Social Security. Failure to pay that balance can be reflected on your credit because it is a payment plan. So they're extending you credit. It's not the same thing of, hey, you have a big hospital bill, and as long as you're making a payment on it, they can't report it to credit. But if you set it up on a payment plan, now it's a loan, and that is subject. So it's like you get your bill, you mail back in a partial, they have to credit you with that, and they just bill you again the next month. But this payment plan, and they can't, and the rules are, and I'm not recommending anybody do it, they can't cancel your plan for not paying your payment plan for your prescriptions as long as you're paying your monthly premium on your drug plan. They can only cancel you for not paying the premium on your drug plan, but they can default you on the credit if you're not paying the payment plan. If you don't pay it, they're not going to extend it again. The other thing is, yes, that $590 deductible is a big chunk, but your drug cost may not be that expensive. You might have to pay the deductible and then be paying $100 a month for it. You're going to be under that $2,000 threshold. So it may or may not make sense to do the payment plan for that reason, because it's just something you have to keep track of. But if you've already paid the deductible, and then your prescription plan is maybe $100, like I said, you're paying $100 or less for your prescriptions, I wouldn't set up the payment plan at that point. But if you know you're going to have a hefty deductible and a big premium or big copay on your prescription, and they'll mail. I think when you get your new paperwork for the year, it's going to be in your membership packets that, hey, here's how you sign up for the payment plan. So each carrier is going to be doing it. So there's probably going to be some differences of how they set it up. It's going to be just like, well, how do you pay your premium to this company versus that company? It's probably going to be something similar to that. It's just you won't have a Social Security option for the payment of that credit line. But if you have some expensive drugs, that's going to make sense. But then again, that's why it's going to make sense to review what drug plan you have. Because some of the plans we've done, you've heard me say, don't buy a drug plan just based on the monthly premium. I think the monthly premium is going to be a lot bigger factor this year than it has been in the past, because it used to make a difference of, $1,000 here or there. Whereas if you're going to hit the max at $2,000, a higher cost premium isn't going to make that much difference. They will still affect, your copay might be a little less, you may a lower deductible or no deductible, but once you hit that $2,000, you still have to pay that monthly premium for that drug plan. That might not be worth it. It might be, the lowest cost drug, if you have stuff real expensive, and I had a client like that. She had a drug that was so expensive that she went in the donut hole, hit the catastrophic coverage, in February. It made sense for her to have the lowest cost plan, because it didn't matter what plan she had. She went in the catastrophic phase, in the second month. So there's some drugs like that. It's going to make sense. Have the lowest cost premium. It's just like I tell people on health plans, the difference between bronze, silver, and gold. The biggest difference is the silver and the gold. You're just buying down the deductible of that bronze plan. They cover the same thing, but your cost sharing is affected. So that's the way I think the drug plans are going to kind of be this week. So, well, we're out of time. So, again, insurancematchmaking.com. Please watch the YouTube videos and like and subscribe those, and we'll see you again next week on the radio.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.